Well, go on, traders. Yeah, the traders are again. Alright, guys. This is the day that we dreaded, guys. This was the day that I was speaking to you guys about from last week with regards to that countdown from the time when Mullen went below the 10 cent, and tomorrow being the 10th day that Mullen would need to get back above the 10 cent in order to remain on the Nasdaq. So they made the announcement yesterday, guys, that they have done a reverse split. So what happened yesterday? The stock fell 21%. So a lot of people with reverse splits, a lot of people rushed in. Reverse splits are never a good thing with regards to the sentiment for a stock. So a lot of persons rushed in, a lot of investment sold, and stock fell 21%. Pre-market, as you can see, we're down another almost 8%, despite the fact that when pre-market just opened, it actually went up 20%. But that's neither here nor there. So in terms of the actual reverse split, it was announced to be effective this morning, and it happened. And the purpose of the split is highlighted here. It says the reverse stock split is primarily intended to bring the company into compliance with the $1 minimum bid price requirement for maintaining its listing on the Nasdaq. There's no guarantee the company will meet the minimum bid price requirement. So what does all of this mean, guys? Let me give it a good, the bad, and the ugly. So for Mullen, we all knew that yes, by September 6th, they needed to be above the $1 for it to remain on the Nasdaq. Also, we knew that if the stock stayed below that 10 cent level for 10 consecutive days, then it will be delisted. So overall, I think Mullen made a decision, a strategic decision, to handle both situations in terms of doing a stock split that will put them above that $1 limit from now, and hopefully they would not need to do it again come September. So what's the good, the bad, and the ugly of all of this? Reverse splits on a whole, guys, is not a good thing for a stock. It's usually a bad sign that the stock is not doing well, which we have seen Mullen is below that 10 cent level. But I guess they had no alternative at this stage. So it could be a strategic decision on the company's part. So what that has done is we ended at 0.0639 yesterday. And so put that level, sorry guys, at that level, if we multiply that by 25, we should open at 1.5975, which is, we rounded that off to 1.6. So at that level, 1.6, if we maintain that 1.6 on upward, we know that yes, this is where we ended yesterday. Above that would be profit, below would be we're in a loss situation. So right now we are below the level that we ended yesterday. So we are actually around 10% down. So the good, the bad, and the ugly of this is that yes, this is a strategic decision by Mullen. The stock is now at a level where we now have a lot more room. This is a bearish sentiment, a lot more room for the stock to drop compared to where we were before. At 6 cents, we didn't have much room left for the stock to drop, but now there is room. Will the stock come September 6th drop all the way back down to $1? Would it be below the $1? We don't know. But the goods, what I'm looking at in terms of the positive side of all of this is that hopefully this is just basically a strategic decision on Mullen's part in terms of getting the stock above that requirement price. But if you, this is the positive side I'm looking at. If you believe that yes, all that was announced will be happening, the stock split even overshadowed this in terms of Mullen announcing a 1,000 vehicle order received from Randy Marion for the group for the Class 3 EV cab chassis truck, and that was valued at 63 million. So if you believe that, yeah, these partnerships, these orders are genuine, if you believe that, in terms of use by the UNC, in terms of universities ordering the cargo vans, if you believe that, Mullen has now, has a new technology in place under the EMM, for the installation in, government vehicles. If you believe all of this, then, I would think if Mullen is basically taking that action to set itself up to, bypass all of that, $1 requirement hanging over their head, and they are looking to move forward with the company, then if you believe that, then it's, would be kind of up to you. If yes, if you believe and you want to stick with the stock, then it will be your decision on that basis. But as usual, as I have always said, trading penny stock is high risk. I am still in Mullen, of course, but with high risk, there can be losses and there can be high reward. So it depends on what you believe. If you believe what has been said, even ignoring what Lawrence Hodge had, came in and did quite a bit of PR stuff the other day. Even without him, if you believe in the company itself, then you make that decision if yes, Mullen would be one of the stocks you want to invest in for the long term. All right, guys, so this is not good news on our part. As you can see, the stock is still taking a hit in the pre-market, but it is what it is. The writing was on the wall, but as I've said before, not financial advice. I'm going to stick with it and see, if in the long run all of this will be in our favor. All right, guys. So sorry about the long video, but I had to kind of just lay it out all there. So if you like this type of content, don't forget to hit a like and don't forget to subscribe. Take care, guys.